I think we're looking at now, there's going to be a lot of stimulus moving forward in China. And I think that could potentially create some really unique investment opportunities. And I mean, this is really your area of expertise. And this is a question that I get multiple emails every single day. People are always interested in, how do we capture this, this future momentum for China? It really does seem that they are inventing the future. Like you said, I mean, if you're a foreigner that goes to China and you have an open mind, the logical conclusion is like, wow, this country literally is inventing the future. The future is in China. It's being built. You can go to Shenzhen, the Silicon Valley of China, and you can see these companies, the innovation. I mean, it's just totally different. And so I kind of want to shift now to that. How are, for example, if people are interested in investing in Asia or specifically China, what is the best way, the best vehicle for them to get involved, and what does that look like?
First, look, there's of course ETFs. If you're a retail investor, there's ETFs out there, whether FXI, which is the broader market, there's KWEB, which is one focused on tech. And, that's the easy way. And I would say the beauty of these is they're liquid, they're easy to come in and out. And I think when I look at the Chinese landscape, for me, there's different opportunity sets. One opportunity set in which we're involved as a firm is the deeply distressed debt. You have a lot of debt today in China trading at below 10 cents the dollar, because essentially you've had 7 or 8 years where a big part of the Chinese economy, i.e. the whole real estate, property, construction ecosystem, was deprived of capital. The banks just wouldn't lend to them. And, tons of bankruptcies, more than 70 property developers went bust. And so, a lot of that debt now trades for cents on the dollar. Meanwhile, you're now seeing the policy shift where the government tells them, okay, you can lend to these guys again. Right. And so there's suddenly an incentive for a lot of these companies to work through their excess debt and to, strike deals with the banks and restructure the debt. If you're an institutional investor, I think that's a very attractive pool to play in, because again, you got debt trading at cents on the dollar. So the asymmetric risk return is really quite a compelling proposition. So, you've got that pool. If you're into the pool of, more growth stocks, like you said, there's a lot of exciting things going on. The challenge always of the growth stocks in China is that if you have a great idea, very often you can have competitors pretty quickly. Here, the best example, of course, is what you're seeing in EVs now. I tend to think that BYD is going to be the biggest car company in the world. It's a tremendous car company. My favorite stat is BYD today has 110,000 people working in their R&D department. To put in context, Tesla has 90,000 employees total. So there's more people working in BYD R&D than there are employees at Tesla. It's an amazing company. It comes out with amazing products, amazing cars, but it has 129 competitors. There's today 130 EV manufacturers in China. That's a tough landscape in which to generate outsized cash flows. So what you see in China, in the research, we call it the Hunger Games of capitalism, is when a new good idea comes out, you have tons and tons of capital that comes in because China's savings rate is very high because the banks have capital. And then you go through 10 years of consolidation. And at the end, you have 2, 3, 4 players, and then these guys make outsized returns. So this is exactly the cycle we saw in batteries 10 years ago. And now you're down to essentially 3 guys. It's always the challenge in China is essentially you don't want to be too early. You want to wait for the consolidation, a certain consolidation in the industries. Yeah, then you can invest. So when you look at, where the, what's the new thing? Where's the excitement going to be in the next 10 years? You say autonomous driving is going to be huge. And China's huge in autonomous driving.
Right.
I think it's ahead of any other country. But concretely, how do you play it when there's so many players? You could say autonomous robots is going to be the big thing.
Yeah, I think these humanoid robots as well, right?
Humanoid robots like the Unitrees that you see on YouTube, and but so Unitree is enlisted, and there's UBtree, Unitree. There's a bunch of companies. And there's a lot of companies being funded right now for this.
I think, just for some more context for our viewers, I mean, I think that's what's so interesting about China is that when you look at these industries, example EV, it is so ruthless and cutthroat domestically within China, right? I mean, it really is the cream rises to the crop, right? I mean, there's going to be, 100 EV companies that start. Not all of them are going to make it. But again, if you are like the BYD that does rise to the top, you have had to compete very, very hard against your domestic rival.
And this is, we're saying, how the misperceptions of foreigners relative to China is like most people look at it as if it's North Korea.
Right.
And where in North Korea we have like one car maker and like one steel maker, et cetera, and all the state resources going to this. Meanwhile, in China, it is cutthroat capitalism. It's like at the industry level, it is the Hunger Games, which, for the end consumer, you end up with better cars and cheaper cars. But
Right.
for the shareholders, it's a tough grind.